Welcome everybody back to the Today's Market Explained, a 4-star podcast and video series. We do both market commentaries to update folks in the financial markets, and we also do interviews with really interesting folks that are in the economic system. They run companies, they do certain types of business that we find very interesting for our investors. And today we have a really interesting lady. Her name is Barbara Morrison. Barbara, welcome to Today's Market Explained.
Thank you, Brian. Happy to be here.
Well, we're delighted to have you. And we learned a lot of really new things earlier in our discussion before we began. Barbara is the president of TMC Financing. It's a Bay Area, San Francisco Bay Area based company. And Barbara is a business leader, civic leader, and founder of this firm that it provides SBA commercial real estate financing. And Barbara explained to me your background, a little bit about how you got here, but we'll talk about what kind of financing that you do. But Barbara, do you want to talk a little bit about your background and development, and then how you got to where you are today? Just give us a high level view on the development of Barbara Morrison to become the president of TMC Financing.
Thanks, Brian. Well, it was not a straight line. It was a circuitous path. I didn't really know exactly where I was going when I started out. But as you know, we both started out at Payne, Weber, Jackson, and Curtis back in the day. You were a registered representative. I was a lowly admin in the institutional department, but I was able to get registered past whatever that was, series 6 or 7, whatever they were, and then became a trader on a institutional equity desk on a small boutique firm in San Francisco for a couple of years. But that was always just a means to an end. I was getting a graduate degree in public policy, and I always wanted to work in local government. So that's where I landed, San Francisco Mayor's Office of Economic Development. At the time of economic development and job creation and small business loan programs all of a sudden coming together, and I was asked to run the SBA program for the city and county of San Francisco. That's how I learned about the program. And much as I loved doing the work, I could not stand the bureaucracy of the mayor's office. And I was young and single, didn't make any money in the mayor's office, and said, okay, I'm done, and I'm going to try and figure out how to do this on my own. So I started TMC in 1981. In those days, SBA limited us to lending only in the 9 Bay Area counties. And that's how I started 41 years ago.
Okay. And now you worked for all these famous mayors like George Moscone and the present day Senator Dianne Feinstein back when she was mayor. So you know a lot of important players in California history.
It was a historical time. Very sad. I was there the day that George Moscone was murdered.
And that's unfortunate for sure. But you saw the development of San Francisco, and as we talked earlier, all big cities in this pandemic era have had a rough go. But San Francisco is slowly coming out of it as well. And then we'll talk a little bit about how that's affected business in the area there. But so one of the things we talk about SBA financing, we've done some SBA financing at 4-star, and everyone thinks that there's a limit of $5 million for any loan, and you're here to tell us that that's not true.
I talk to people all day long that say that, but SBA loans, you can only go up to 5 million. And in the SBA general loan program, which is called the 7A loan program, that is correct. That's the program that makes loans for businesses for working capital, tenant improvements, equipment, BizAc. Yes, those loans are typically made by a bank to a business. The bank gets an SBA guarantee, and those loans do max out at 5 million. And that is the program. When people hear SBA, typically that's the program that people think about. And what I am so excited to be able to tell you and your listeners about is the other SBA program, which is called the SBA 504 program.
Right.
It is specifically for commercial real estate and heavy equipment. So our borrowers are business owners who choose to buy their buildings rather than lease them. And again, because SBA is all about job creation, the idea behind the program is that for a small business to be able to buy their building using conventional loans requires a hefty down payment, typically 30, maybe 35%, depending on whether if it's a special use building, it could be 40% or 50%. And the idea was that takes working capital away from the business and that inhibits their growth. And so the SBA said, no, we want to be able to provide the real estate financing for businesses in a way that will enable them to conserve their working capital and keep growing and keep hiring people. Because the whole purpose of this program is that it's a job creation program.
Economic.
So I have to say, I've worked with a lot of different loan programs when I was in the mayor's office, and I do think this is the best and most creative public-private partnership that I've ever seen. For one thing, this is a big surprise to most people. There's no public money in this program. It's completely fee supported by us, by the banks, and by the small businesses. So there's no incentive on Capitol Hill to ever get rid of the program because they can't save any money by doing away with us. So we have the security of longevity on our side. But the way the program works is we combine a first mortgage from a bank, a credit union, a conventional lender. They make a regular, conventional, commercial real estate loan, typically for 50% of the project cost. Our loan, the SBA portion, is for 40% of the project cost, which means that it's 90% financing.
Okay.
And it's 90% financing of both the purchase of the real estate as well as any improvements that need to be made to the building.
Okay.
So if you buy a $2 million building and you need $1 million to bring it up to being useful for your business, we have a $3 million project and we provide 90% of that. So the idea is, again, limiting the cash outlay from the small business.
Okay. Wow. That's
the 40% second mortgage. The other advantage is that our second mortgage comes from the sale of bonds in the private capital markets. Those bonds carry a 100% government guarantee. So they trade at a slight multiple over the 10-year treasury. So we today the rates just came out today for this month, and they just ticked up 50 basis points, unfortunately. But it's right now about 5.5 fixed for 25 years.
Okay. Interesting. So it is based on a conventional mortgage, and then you bring it up to 90%. And then is there a federal guarantee behind the portion that you?
Yes, our portion is 100% guaranteed by the government.
Okay. What kind of security does the commercial investor need to put up? Just the property, or?
Yes, that's exactly right, which is different from the 7A program. If you have experience with that, one of the downsides to 7A is that typically SBA requires additional collateral, and often they'll take a second on the business owner's home, which is a deal killer for a lot of business owners. Because we're financing real estate, that's the collateral we take.
Fascinating. So how often do these loans go bad?
Well, so from 1981, when I started, until 2008, 2009, we had never had a loan that cost the government even one dime.
Okay.
Now, California real estate has a habit of going up in value. And so typically, if the borrower got in trouble, they were able to sell the building and pay us off.
Right.
So there was that. Now, 0809 was a complete different story when the value of real estate plummeted. And so there were some losses during that period. But since then, we have an active portfolio of about 1,600 loans, $1.7 billion. This is pretty amazing. We have 3 loans today that are past 90 days.
3.
Yeah.
Wow. Okay.
Now, we have some loans that got into trouble, but we were able to do a workout with them where we could reposition it. We could take it back and give them an extended period of time to pay, or they're on payment plans, but they're all current on their payment plans.
Okay, interesting. So you restructure them when they get in trouble, try to keep it. That's 3 of how many loans?
1,700.
Oh my goodness! Wow, that's really great. So there must be some pretty good credit quality, or maybe good underwriting, or. Is that all you, Barbara? Is it
Yeah, all me. I will say that SBA makes loans to borrowers that commercial lenders wouldn't typically make. That's our job. That is our mission, is to provide capital and enough capital to businesses to make this happen. Now, we certainly do underwrite, and we certainly do look at historical repayment ability. But we also are a little bit more of a story lender than most commercial lenders would be, in that we can work with borrowers who don't have historic cash flow to support the future debt, and we can work with projections as long as the narrative makes sense. So we are providing capital to businesses that they might be eligible to borrow money from SBA, conventionally, but they wouldn't be able to borrow enough money to purchase the buildings without SBA.
Okay. Interesting.
The other thing I would really like to mention is the concept of what is small, because I think that many advisors and lenders, even bankers that I've run into, don't realize that the SBA definition of small is actually pretty broad. And we really are able to work with most privately held companies, because the definition of small is there's no limit to revenue. It is based on the net worth of the company, based on tax returns, and the net worth cannot exceed 15 million. And the earnings after tax on average for the last 2 years can't exceed 5 million. Very few privately held companies want to keep that much cash in the business. So we find that we rarely run into businesses that are too large for us, which again is a surprise to most people.
So it's all measure the size of the business, and you have a lot of room there. You can move it around. Okay. Good. Well, this is really interesting. So you've done 1,700 loans yourself.
Oh, we've done thousands. Our portfolio today is just 1,700. While the loans have a 20 or 25 year maturity, they generally pay off, around 7 years. So our active portfolio is only 1,700, but we've done thousands and thousands. And the other thing that I will mention is that in addition to the fact that this allows the business owner to secure their second largest line item on their P&L after labor, of course, is occupancy cost. This allows them to control that. But the way our borrowers take title to the property is as individuals or in a separate LLC. And then they lease the building to their business. And then when it comes time to retire or sell the business, they can sell the business and keep the real estate. And that's their retirement income.
I see. Okay. All right. So do a lot of folks do it that way?
The vast majority.
Oh, is that right? Okay. So I didn't, so not only did we not know that there's a large lending program larger than 5 million, we had no idea that folks use this as a way to build a business and then sell things and transition to retirement in the same program.
Yeah.
Pretty cool.
And most of our borrowers will tell us that they made way more money owning their real estate than they made in running their business.
Right. Wow. Wow. Okay. So what's the future of this program? How does it look considering all the swirling controversy with the American government these days?
Very few politicians would ever stand up and say that they are against a job creation program.
Right.
So, it really, in 1980, Ronald Reagan actually did try and close the SBA. And even with his political capital, he was not able to do it. It really has bipartisan support and always has. And as I said, because we don't cost the government anything, so that there's no reason for anybody to say, let's get rid of this program.
So if you say that the program doesn't cost the federal government anything, and the federal government has guarantees on it, so how does the federal government make sure that they don't guarantee more than they have revenue coming in?
So that's a very good question. And certainly during 0809, they did have to, when loans did go bad, the Treasury actually was at a deficit in the program. But other than that one time, that 2 or 3 year window, we actually track the amount of money that our loans generate for the government. And so we know how much money we're providing to the government in loan guarantee fees. And obviously we know how much we're costing the government if we have any loans that have to get paid off. So it is a program that on balance has tracked really well and has been, in fact, a moneymaker for the government rather than a money loser.
Oh, great. So now we're officially in a recession, but it doesn't seem to be a severe one. But considering what's going on, interest rates are rising sharply to beat inflation, which is bad as the 70s when you and I were at places like Payne Weber. And so we're probably going to see an economic slowdown. And even the Fed chief has said that, that they're going to have to raise rates. And if we have a slowdown, God willing, that's the way it is. And so what could that do to real estate, and what could that do to the loan program? Is there anything we should be concerned about that?
Well, obviously, so in 1981, when I started, the prime rate was 19%.
Was. We all remember.
And so I've been through, different cycles. And what we find is that when rates go up and banks start tightening their credit policies, then the SBA market is a bigger share of a smaller market. Mm-hmm. When there's lots of money around and the banks are flush and they are loaning money right and left, SBA has a smaller piece of a bigger market. So economic cycles don't affect us that much. Now, I'm positive that we've had 2 record years in the last 2 years. I'm positive that 23 is going to be slower than 21 and 22 were, but it'll even out.
Okay. So it sounds like because of the SBA guarantees, the program is a lot more steady than the banks, who kind of go back and forth, either lending or they're clamping down. We joked earlier about the old adage that the only people that don't need financing can get it. And if you really need money, you can't get it. So SBA kind of manages some of those issues. But very interesting. Well, good. What else would you suggest would be important to someone who wanted to approach you or any other companies in your industry about financing?
So I think, first of all, I'll say that we, TMC Financing, we're known as a certified development company, which means that we're certified by SBA, which means that every SBA 504 loan in the country is made by a CDC, or a certified development company.
Okay.
There are about 220 CDCs nationwide operating. Some operate in one state, some operate in just a few counties, some operate in multi-states. We operate in California, Arizona, Nevada, and Oregon.
Okay.
And but all CDCs are regulated by SBA, which means that our fees are regulated by SBA, so that you don't shop CDCs for fees, because if you work with me or someone else in California, the fees are the fees. And you don't shop for rate, because the rate on the SBA loan is set once a month, and it's the same rate in every state in the country for every CDC. So the only thing you look for when you are looking at how to choose a CDC to work with is track record, because the more deals you see, the better you understand the program. And so what I always advise people to do is look at the size of the CDC. How many loans a year do they do? You don't want to work with someone that only does a handful of loans every month. TMC happens to be the largest CDC in the country. So far this year, we've done about 450 loans. The year ends September 30th. So we'll be just under 500 loans this year. Now, there are only a few CDCs nationwide that do that sort of volume. There are probably 10. But if someone wanted to work with a CDC in some state other than the state that we can work in, I would be happy to make a referral to one of my colleagues in another state that I have knowledge of.
Okay, fascinating. So Barbara, if you started TMC, well, by the way, what does TMC stand for?
Well, originally, when I started, it was the Morrison Company.
The Morrison, okay. So the Morrison Company, now TMC. How did you become the largest of all the CDC lenders?
Really it is, as I say, because you can't compete on price. The only thing you compete on is service. And my goal for the company always has been customer first. The SBA program, and rightly so, is known as cumbersome, which it is. And it seems like every year SBA comes up with some new way to make it more difficult that we have to learn how to navigate. And so we invested heavily in technology to make the user experience as painless as possible. And I will say that the other thing that means a lot to me is every year we get voted as one of the best places to work by the San Francisco Business Times. So our staff is seasoned. I mean, I have people that have worked for me for 20 years, many.
Wow.
And that institutional knowledge is priceless.
Mm-hmm. Fascinating. And how many people work for TMC now?
100.
Future.
About 100. In fact, we doubled during the pandemic. We went in 2019, we were at 50, and now we're at 100.
Wow, that's amazing. So Barbara, if this program is so attractive, why are people still talking to regular banks then?
Well, we get most of our loans referred to us from the bank. So hopefully when somebody goes to their bank and says, I want to buy a building, hopefully the banker will say, oh, I think the best way to go for you is SBA 504, and then they call us up. So most of our loans come to us from bankers. Some of our loans come to us from real estate brokers who know the program, who, when they're showing property to someone, they'll say, how are you going to finance it? And the person will say, oh, I'm going to use my bank. And then the broker, if they're smart, will say, well, I think you ought to talk to TMC and see if you qualify for SBA. So that is the normal way for us to get our business. But as I said to you at the beginning, Brian, I'm so happy to be able to talk to financial advisors who speak with business owners all day, every day. And, the financial advisor is a trusted source for this kind of information for their clients. So I'm so pleased to have the opportunity to bring this to their attention.
So watching this broadcast is going to be lots of financial advisors across the country, and as well, most of the 4-star clients in our firm, and then anyone who happens to see it on LinkedIn, Instagram, and the various video clips that will be on TikTok. So you'll be a TikTok star, Barbara. Don't even have to dance. But it'd be very interesting. But I still come back to this idea that there's so many banks out there, but yet maybe banks, they just have a lot of rules that are annoying, and people don't conform to them, or they don't meet their portfolio, or they don't make enough money on it. So the SBA provides a backstop to that program, but it's not like the loans go bad or anything. I mean, they're still good credits, right?
Mm-hmm. Mm-hmm. And I think that the bankers also understand that this makes their loan more secure, because if they have a 50% first mortgage and they have a 40% government second in back of them, even if the loan did go under, they're never going to foreclose. SBA isn't going to walk away from a 40% second. So the bank is going to get paid off.
Yeah, interesting. Wow. Well, that's great. This is really great news. You live and learn and think you know everything, and I think a lot of our listeners are learning a lot today about SBA. There's small business loans as well, and what other programs are in SBA besides 504 that we don't know about?
SBA has a microloan program,
Okay.
and that is for startup businesses. I think it goes from 5,000 to 50,000, something like that. And that is administered by various nonprofits. And those are and then there's we also do something called Community Advantage. And that is certified development companies have been given the ability to make 7A loans, the kind that you're familiar with, but only up to $350,000. And the reason for that is because most of the major banks that participate in the 7A program make way more money if they make larger loans, obviously. And the smaller loans don't make them as much money, and they tend to be smaller borrowers that aren't sophisticated, takes a lot more hand-holding. So in order to encourage SBA 7A small loans, they gave us the ability to make Community Advantage loans. So we make loans to small businesses for $50,000 to $350,000.
Okay. So now as we're doing this on the TV here in our studio, I have the TV on showing that the Queen of England has just passed on, and America came out of England, and just watching now, Charles is the king, of course, and America's really grown dramatically more than Britain in the last 100 years or so. Are programs like this part of that reason? I mean, are we more innovative than the European?
I actually think that the American innovation and entrepreneurship is one of the things that sets us apart as a country. Every day when I work with our borrowers, I am so inspired by the resilience, especially during the pandemic, to see these businesses pivot and change and make do and figure out how this doesn't work, so let's try plan B. The resilience and the determination and the grit of these entrepreneurs is what keeps me doing what I do all these years.
Yeah, that's exciting. Well, and that is very much ingrained and etched into the brains of Americans to be an entrepreneur and get out there and work hard, and you can achieve anything, you can do anything if you really set your mind to it. So the SBA helps finance a lot of those dreams, and that's really exciting stuff.
And I will add to that, at least 20% of our portfolio, our borrowers are immigrants that came here from all over the world with nothing and have made successful businesses that employ them and their families and their employees and grow and pay taxes.
Nice. That's really great. Well, we learned a heck of a lot today, Barbara. We really appreciate your being with us today. And if any of our listeners are interested, they can reach you at TMC Financial in San Francisco. If anybody wants to reach out to the Financial Advisors Workshop, we can pass along your contact information, right?
Sure. Great. Happy to.
Well, good. Well, we're very lucky to have had Barbara with us today on today's Market Explained, a 4-star podcast and video series. And we will look forward to having more episodes with great folks like Barbara again in the near future. So thanks again for being with us today, Barbara.
Great to be here, Brian. Thanks so much.